Imagine waking up one day and all the money in your bank account is worthless. Hyperinflation, political instability, global uncertainty, all the systems that we've relied upon for the past few decades are starting to collapse. What would you do? What would society do? Nobody is prepared for what is about to come next. And no, this isn't about some crypto hype. This is about real-world solutions to real-world problems and why Bitcoin could be society's last hope. In the next few minutes, I'm going to explain why the world needs Bitcoin now more than ever and why nobody is prepared for what is about to come next. So I hope that you're ready. Let's dive in. Okay, why Bitcoin could be society's last hope and why nobody is ready. So before we dive into this video, let's briefly zoom out and take an audit, take an account of how currently society is looking at and what are some of the challenges that we're currently facing. The first thing that we see is that in the past few decades, we have seen quite a big number of bank failures. So over here, you see a chart of all of the bankruptcies in the past few decades. And you see a very large spike around 2008. That was around the time of the mortgage crisis, the 2008 financial crisis. That was when a lot of banks went bankrupt. We saw the fall of Lehman Brothers and a few other very big banks. And in fact, we saw more than 150 banks, actually a few hundred banks go bankrupt. So the institutions that we have trusted to take care of our money, the banks, are actually not as safe as we used to think, yet we entrust them with all of our wealth. Here below you see a table of all of the bank failures in the previous year. So in 2024, we saw one bank failure. Last year, 2023, we saw 5 banks go bankrupt. In 2020, 4 banks went bankrupt. In 2019, another 4 banks went bankrupt. In 2017, 8 banks went bankrupt. In 2016, 5 banks. 2015, 8 banks. 2014, 18 banks. 2013, 24 banks. So if we go further down the list, 2010, almost 160 banks. In 2009, 140 banks. In 2008, 25 banks. When you're hearing these statistics, did you know that so many banks are actually going bankrupt? And now we're talking particularly about banks in the United States, but this is a common phenomenon that is happening all around the world. Again, the institutions that we have entrusted to take care of our money are actually not that safe. Why? Because banks in a, how would you say it, capitalistic system where the top management is rewarded for excessive risk taking, they're not doing what is the best for their clients, but they're doing what is the best for their own paycheck, their own bonuses. And that's why we're seeing a disconnection between what the top executives are doing and what is best for the shareholders of the bank or what is best for the clients whose money they're taking care of. So that is one issue that we're currently seeing. The second issue that we're seeing is that all of the financial markets are currently intertwined. And not that long ago, a few weeks ago, we saw an announcement by the Japanese central bank that they were going to increase their interest rate. And this comes after a few decades of 0 to negative interest rates, meaning that people could almost borrow money for free. In many cases, they could borrow money for free. And all of this borrowed money flowed into other assets like the S&P 500, real estate, crypto. And when the Japanese central bank started to increase the interest rates, then people started to panic because they knew that suddenly they had to pay interest and their debt servicing liabilities started to go up. So this triggered a massive cascading sell-off globally in many different markets. And now we're seeing that the global economy is not that stable at all. Like there are just a few small things need to happen before it all comes crumbling and crashing down. So economic instability is definitely something that is on the minds of a lot of people, and that is a big risk for your financial situation. Now let's talk about the next thing, which is poor financial inclusion. I grew up in the Netherlands. I am used to banking. I got a bank account quite early on, and that's quite common for people in the Netherlands. I also think it's quite common for most people in the Western world. But that's just a small fraction of the population. Remember, the biggest populations are actually in China, India, many other Asian countries, South America. And over there, it's not that common at all for people to have bank accounts. Many people do not have access to traditional banking and as such are excluded from the traditional financial system. Here you see the numbers of adults with a bank account in percentages of the world. So in 2014, we saw that around 60% of the people had bank accounts. In 2017, we saw that around, 67% of people had bank accounts. In 2021, we saw that a bigger amount of people, like 73% of the population had access to bank accounts. Whereas if you look at the high income economies, like the first world economies, you see that it's almost around 90%. And if you look at the developing economies, you see that it's below or around 60%. And yes, this is increasing over time, as you can see, which is positive news. But still, there is a large percentage of the population that doesn't have access to traditional banking, that doesn't have access to the same financial opportunities that we have, to send and receive money, to get loans, to buy real estate, those kind of opportunities that I'm talking about. So this is something that we should work on as a society. We should level the playing field so that at least everyone has access and at least everyone can participate in this global economy. Then the fourth thing that we're struggling with right now is low trust in institutions. When we're talking about institutions, there are many different institutions out there. For example, we have the hospitals, people that are practicing medical professions. We have science and academics. We've got non-governmental institutions, non-profits. You have charitable foundations. You've got bigger global entities like the United Nations. You've got national companies. You have, of course, the government. You've got global corporations and, of course, the press. Now, here is a research from 2024. This is for the US, but I think it's quite indicative for the Western world. And what we're seeing is that nowadays we are not trusting our own government anymore. There is record low trust in the governments worldwide. And there's a record low trust in the press. Now people are waking up more and more that the mass media is not your best friend. They are pushing their own agenda. And their business model is to play into people's fears. They know that fear triggers most eyeballs and hype and gets people to be hooked to the news because they're fearing their livelihood, they're fearing their future. And as such, the mass media is not always reporting objectively what is happening in the world. And people are starting to realize this. Now we've got platforms like X or other social media platforms like Rumble, where more unbiased news is being published. And when you're putting that next to each other, you're actually seeing what is really happening in the world and what agenda the mass media is pushing upon us. So yeah, we're right now living in an era where we are at record low trust in our institutions. Institutions that should have our best interest in mind, but are now actually starting to pivot to more authoritarian ways of governing or running a society. And then we're also dealing with a lot of fraud and corruption in the financial system. For example, big banks that were involved in money laundering scandals. They were literally money laundering for some of the biggest cartels in the world. Here, Citibank was money launderers' favorite bank, US law enforcement officials say. HSBC moved vast sums of dirty money after paying record laundering fine. And finally, Bank of America pays a $16.65 billion fine in historic Justice Department settlement for financial fraud leading up to and during the financial crisis. So again, what I mentioned before, the financial institutions that were once created to take care of our money are now slowly shifting from serving us to serving their own self-interest, and in particular, getting the biggest bonus and the biggest paychecks for the executive team members that are pocketing hefty commissions from all of these deals that are being done under the table in gray zones. And I think that is quite a big shock. So let's talk about the role of Bitcoin in society, because as I mentioned in the introduction of this video, I believe that Bitcoin has the potential to solve many of these problems that I've just outlined. So what is great about Bitcoin is that it's decentralized. So when you are dealing with a bank, there is one centralized authority. It's the leadership team of the bank, and they're basically calling all of the shots. And the books of the bank, it's not very transparent. You cannot always see all of the money flows. They can easily cook the books. Well, it's not easy because banks need to be audited by external auditors, but there are certainly ways to cook the books and to change the numbers to hide what is really going on. So it's a very fraud sensitive system, especially when there are big financial incentives to do so. Now, the thing with Bitcoin is completely decentralized, meaning that there's no central authority. There is no CEO, there's no executive team that calls the shots. Basically, everyone can participate in the Bitcoin network. It is a financial system created by the people for the people. And it has been created in such a way that all of the transactions and all of the wallets are open and publicly available. You can see the blockchain almost as a scoreboard, a public scoreboard. You can see all of the amounts that are in all of the wallets. You can see all of the transactions that happened over time. And because so many miners are participating in the network, they're all validating the transaction. So it's not possible to go into the transactions and to commit fraud by changing the recipient or the beneficiary or changing the amount. It's not possible. You cannot go back in time and change transactions that are posted on the blockchain. So it's a system that has been created to prevent fraud. So it's a much safer system that people can actually trust. The second thing is Bitcoin is seen as a great hedge against inflation. Well, what you should understand is that your money is losing value every single day. This happens because governments around the world are printing trillions to keep their economy afloat. And with every unit of money that gets printed, every dollar or euro or yen or pound that you have in your bank account or whatever currency that you have in your bank account becomes worth less. So they're robbing you of your purchasing power. So you need to find a way to protect yourself against that inflation. You can do this by investing in assets that increase in value over time or that pay you a cash flow. And Bitcoin was announced to be the best asset class of the past decade because it generated an annualized return of around 236% per year. That's insane. That is so much higher than many of the traditional investment vehicles that people are used to investing in, like stocks, bonds, and those kind of things, real estate, gold. So here is a news article of Benzinga that is basically stating what I just mentioned. Bitcoin becomes the best performing asset of the past decade, returning 10 times more than the Nasdaq 100. And here below you see this table that this headline is based upon. It was posted on Twitter by Charlie Bellilo. And here you see the asset class, so Bitcoin, the Nasdaq, large caps, small caps, REITs, which stands for Real Estate Investment Trust, treasuries, preferred stock, high yield bonds, all of those things over here. They compare it over a decade, so from 2011 until 2021. At that point, 2021 was still being completed, and they calculated the average annualized returns. So here you could see the Nasdaq 100 generated around 20% on an annual basis, but Bitcoin generated 230% over the same time frame. So if you assume that your money is losing value with something around 2 to 4% per year, you want to invest your money into something that increases in value. So if Bitcoin generates around 200% per year, then even if there is inflation and your money loses value with around 4%, then you still have a net return of 196%. And of course, past performance is never a guarantee for future success, but Bitcoin definitely has a very strong track record in generating really great returns for its holders. So Bitcoin is a great hedge against inflation, at least up till now. Then let's talk about transparency. So one of the big issues with the banks, which is also why we see headlines like this about money laundering, is that banks are not very transparent. Again, you cannot really see all of the transactions that the bank is doing. It's very easy for them to hide and to cook the books and to obscure what is really going on. Whereas with Bitcoin, it's not possible. You can see everyone's wallet. You can see all of the transactions. Of course, it's a pseudo-anonymous system. So meaning that if you don't know who owns which wallet, it's quite anonymous. But if you can map certain names and people to a wallet, for example, BlackRock's wallet or Satoshi Nakamoto's wallet, which is known. Over here, this wallet address is Satoshi Nakamoto's address. There's around 1 million Bitcoin in it. And you can see all of the transactions, all of the history. Everything is open and publicly available. You also know exactly how much Bitcoin is in circulation. So as of right now, we have mined around 19.75 million Bitcoin, meaning that we still need to mine a little bit more than 1.2 million Bitcoin, which will happen in the next 100 years. And this is completely open and transparent. And we know exactly at any point in time how much Bitcoin we already have in circulation. And if you compare this to other investment vehicles like gold, well, gold is a very untransparent industry. You don't know how much gold supply we have. You don't know how much gold is being mined every single day. And there's a lot of incentives for people that are holding gold or people that are holding gold on their balance sheet to manipulate these figures so that either the price of gold gets suppressed or gets increased depending on whatever is in their favor. Now, why could Bitcoin be a game changer? How could Bitcoin solve the issues? Well, Bitcoin, if you compare it to other stores of value, so if you don't know what a store of value is, throughout history, people have been looking for mediums to store their value, their wealth, and over time, they want to protect themselves against inflation. So gold has been the go-to store of value for people that want to protect themselves against inflation in the past few centuries. And if you look at this chart, so you see the properties of gold, the properties of fiat money, so paper money issued by governments, and the properties of Bitcoin. Then you see that Bitcoin has almost all of the properties of gold, but it is even better. It has even better properties than gold. What properties does it have? For example, portability. What do we mean with portability? Imagine that World War III breaks out and you've been hoarding gold for the past few decades. Then gold was always seen as the safe haven in times of chaos. Well, how safe is it for you to walk with a wheelbarrow of gold over the street, to exchange it for cash, to do your groceries when there's a world war going on? That's not really safe, because when people see you walking on the street with lots of gold bars, trust me, in times of chaos, you're going to be stabbed, killed, and robbed. Whereas with Bitcoin, you could put a ledger in your pocket, you could cross the street, and nobody would even notice. So it's a much safer way to transport your wealth. Then let's talk about divisibility. So it's not very easy to break a gold bar into smaller pieces. You would have to melt it, which you would need an oven, special equipment. It's very hard to turn it into smaller pieces. So you would have to cash out either a full gold bar, or you would have to melt it and make it into smaller gold coins. Whereas with Bitcoin, you can very easily transact very small fractions of a Bitcoin. We call that sats, satoshis. Then security, again, it costs quite a lot to store and secure your gold. You need a special safe, camera equipment, you need guards, and this also costs quite a lot of money. Whereas with Bitcoin, you can easily get a cold storage wallet. Will probably cost you around $100, and you store it somewhere in a safe spot, and you're good. Then is gold easily transactable? No, gold is not easily transactable. You need to go to an exchange. Those exchanges are not in every street. It's not very safe to carry all of your gold to these exchanges. And these exchanges also charge quite a big markup. So if you want to sell your gold, you're never going to get the market value because these exchanges also need to make money. So they're going to give you a certain percentage below the market value. And that is their markup. That's their profit. That's their business model. Whereas with Bitcoin, you can very easily send your Bitcoin to an exchange or to a decentralized exchange, and you can swap it to USDT, USDC, or if you're operating through an exchange, you can even convert it to cash and get it sent to your bank account. Also in countries like the United Arab Emirates or Indonesia, there's also money exchanges where you can simply send crypto and you receive cash. In some cases, you can even buy houses or cars with crypto as well. I don't know many that accept gold. Actually, I don't know any of those that accept gold. And then let's talk about scarcity. So at any price, it is possible to mine more Bitcoin. For example, there are rumors that it is possible to mine comets. Let's say that Elon Musk really develops space traveling and he's able to send spaceships to comets and starts to mine the core of all of these comets to extract precious metals like gold. Of course, it's very costly to send spaceships to mine a whole planet to get new gold, but there is a bigger supply of gold and there is a very limited supply of Bitcoin. There's only 21 million Bitcoin. So no matter how much money you want to throw at the problem, you cannot generate more Bitcoin, but you can mine more gold. So there is not a maximum cap to the gold supply that there will ever be in circulation. Bitcoin is of course decentralized, meaning that there's no central authority that is running Bitcoin, whereas gold, there are a handful of entities and institutions that are basically controlling the gold market. Think about the banks, the governments, they're heavily manipulating the gold price. Then programmability, so you can program smart contracts on the blockchain to do automated transactions on the blockchain. For example, if something happens, then you pay out this certain amount of Bitcoin. You cannot do that with gold. Gold is not programmable, Bitcoin is. So in many ways, Bitcoin has similar properties to gold, but it has even better properties. So that's why it's digital gold with much better properties. And that's why I believe Bitcoin could over time surpass gold as the go-to store of value. Next, let's talk about financial sovereignty. So what do we mean with this? We're living in an age where governments are more and more taking control over your life. They're monitoring every single move that you're making. Whenever you're doing big transactions through the bank, they want to know everything: invoices, contracts, the passport details of the person that you're transacting with. And they can also decline your transactions if they don't like it. And in many cases, they can even close your bank account without having to give you any notice. I've been in this situation in the past twice, actually, without any real reason. And Bitcoin gives you back the control over your own finances. When you own and hold Bitcoin on your cold storage wallet, so in self-custody, there is nobody that can tell you what you can or cannot do with your Bitcoin. If I want to send you Bitcoin, I can do that. If you want to send me Bitcoin, that is possible too. So it gives back the control over my financial situation. And I believe that everyone that takes their own financial freedom serious should indeed hold some Bitcoin for this purpose. Resistance to censorship, indeed. So what you've seen happening in the past, and this is a very extreme situation, but for example, Kanye West came out with some anti-Semitical statements a while ago. I believe he mentioned something about Jewish people being in control of Hollywood or being in control of the world, and he made some comments about that. And within a very short period of time, he got debanked. The banks literally said, "We don't want to do business with you anymore." Look, what Kanye West has done, or what statements he has made, I don't want to make any comments about this. Some could say that's just freedom of speech. Anyone can have an opinion about anything. But the fact that banks can exert this amount of pressure by just simply terminating a banking agreement if they don't like what you're saying on the internet, I think that's a serious red flag. And holding Bitcoin yourself gives you resistance or gives you an opt-out against that system. You don't have to be trapped in that system where you are at the mercy of banks or governments to allow to basically allow them to get control over what you can or cannot do or can or cannot say or where you can or cannot move. I want to remain completely in control, and that's why I believe Bitcoin gives me a way to opt out of that traditional dystopian system, which seems to be only getting worse and worse. Now, in the title of this video, I also said that nobody is ready for what is about to come next. So let me also give you the arguments for that. Right now, we're still very early in the adoption cycle of Bitcoin. Whenever a new technology gets released on the market, there is this adoption curve. And you always see that a very small section of people, we call them the innovators, the early adopters, first start to adopt a technology. This is usually the tech enthusiasts, the developers, the academics that really are deep into that niche. And we saw that as well with Bitcoin. Bitcoin started out as some cryptographic technology that got adopted by basement geeks, academics, hardcore coders, and slowly over time it started to get adopted by retail investors. Now we're seeing that institutions are coming in, and soon we might see that the late majority also starts to adopt Bitcoin. Bitcoin hasn't yet reached mass adoption yet. You'll know that Bitcoin has reached mass adoption when it's very easy for your neighbor, your aunt, your barber to transact and to acquire Bitcoin, and when they really understand how it works. You can almost compare this to the internet. When the internet emerged in the 1990s, again, it was very hard for most people to understand and comprehend and work with computers. But now even your grandma probably has an iPad in order to check the news. So that's also going to be something that's going to happen with Bitcoin, that the average person starts to use it and starts to transact in it. Then let's talk about institutional inertia. So whenever a new and emerging technology comes into the market, we always see that the institutions that are in power try to resist this disruptive technology. A great example is when in the early 1900s, horse and carriages were the main mode of transportation in New York. And then suddenly the automobile got invented. And this was a way more superior technology that allowed people to move from place to place much faster. But the people that were running the horse and carriage industry saw this as a very big threat. So they started to protest, and they started to make it more difficult for cars to be adopted by the masses. They started to publish news articles, started to organize riots against cars, started to come up with all of these arguments why cars would be bad for society, why they would cause pollution, and why they would be very dangerous, that they could cause accidents, etc. But over time, this disruptive technology, cars, are now a very integral part of everyone's life. But you need to understand that when these institutions first see this very big threat of this disruptive technology, they will resist it. And that's what we're seeing now with banks and governments trying to resist Bitcoin. But at one point, there will be a pivotal point where they cannot resist it anymore, and they instead should embrace it. And we're actually already seeing that, where banks who were the biggest skeptics of Bitcoin are now embracing Bitcoin. I call this the big pivot. And countries might soon start to embrace Bitcoin as well. And that's when we're going to see a hockey stick curve chart that is going to form in terms of the adoption. And that's when we're also going to start to see billions and trillions flow into this market. Then fear and skepticism. If you are new to Bitcoin and crypto, then you probably don't know that the market moves in 4-year cycles, which are correlated to the Bitcoin halving events that happen every 4 years. And every 4 years, we see a massive correction down. Earlier, we saw a minus 96% correction. Then we saw a minus 86% correction, a minus 84% correction. We saw a minus 77% correction. Look, if you don't understand the crypto market, if you don't understand the technology, if you don't understand the market cycles, then these price swings downwards can be very scary, especially if you are a rookie investor. But we've seen time and time again that after these big corrections, we see massive increases in the price with 11,645%, a 7,382% correction, and pump, and a almost 2000% pump. So when Bitcoin matures, we're probably going to see that this volatility, so the upward price swings and the downward price swings, are going to decrease over time. And Bitcoin is probably slowly going to behave more like a tech stock, like a Google, an Amazon, or those kind of stocks. So when that happens, we're also going to see that the fear of the masses is also going to slowly decline, and that people are going to embrace Bitcoin and crypto as a mature asset class. So those are the reasons why people are not yet ready. They're not yet prepared for what is about to come. But over time, they're going to start to embrace Bitcoin more and more. Now, I hope that you enjoyed watching this video. Let me know in the comments below if you agree with my thesis that right now we're facing a lot of big problems with society, with banking, low trust, a lack of transparency, and that Bitcoin can solve all of these problems. And that when more and more people start to adopt Bitcoin, then we gain more financial control back over our lives. And that is why Bitcoin was created in 2008 by Satoshi Nakamoto. All right, I hope that you enjoyed watching this video. If you did, then make sure to hit the like button and to subscribe to my channel, because I'm going to be posting regularly throughout this crypto market cycle to help you to get an edge in this market. All right, that's it for this video. Peace out, and I'll see you in the next one.